I think they can probably hear you fine. I don't know. I'm trying to switch over to my computer, so we'll see.
Okay. Awesome. Well, I'm excited to talk to you guys today and talk about what's going on. I think we noticed a trend this year. There's a lot of people that are kind of going, well, we want to wait and see what the administration does, and they're holding off. And I don't know, but after being through what we've been through this last couple of years through the pandemic, we haven't seen the wait and see model really benefit any of our small businesses. So now's the time to get on top of everything. So if something does come down the pipeline, you have taxes that have been filed, you have a business that's compliant and ready and can take advantage of any opportunities that come along, whether that be federal grants, whether it be SBA loans, or whatever they decide to do this time around. We want to make sure our businesses are compliant and ready. And that's what we're advising our clients as we work with them during the year, is that whenever the government has subsidies or anything available, the first thing they're going to look and they're going to see, are your taxes filed? Are your taxes current? Have you been paying taxes? Do you really have a business? And the best way to show evidence of that is to show returns that have been filed and income that's coming in through your business that allow you to qualify for things that are opportunities that'll come out from either federal or state. Some of the states are putting together some grant programs and the county programs as well. And so we want to make sure our small businesses are ready and available for that. We've also been talking with some of the community financed institutions, CDFIs that are out there that were projected to have large federal cuts. But from what I hear from this back from the CDFIs is that they're still lending money to small businesses. They still have funding, whether it be philanthropy funding versus federal funding or state and local funding, but they're out there with funding and they're looking for small businesses that can come with complete financial statements and give a financial story that makes them want to lend the money out and feel good that they're going to have a return on that investment. And so that's what we're here to do, is to work with you guys to ensure that your businesses are compliant, that you have the full financial picture and you can tell your financial story on your business, and you can entice investors as well as qualify for loans if your business needs capital funding. And that does start with having up-to-date and accurate tax returns as well as accurate financial statements. So we're going to jump really into this tax session and start talking about tax implications for your business. So again, I'm Lisa Laday, CPA, owner of S&B Tax and Accounting. So today we're going to talk about making sure you're ready for tax season, which is really almost beyond us when we think about it. The 15th is next week, and we have a very short period of time if anyone needs to get their taxes filed and get things out and have it compliant. So if you have a business and you haven't been doing record keeping all year long, you're going to be hard pressed to try to get anything done before the deadline. So now is the time to schedule a consultation. Let's have a discussion. Let's see what your situation is, and let's plan the best plan of action for you and your business. So first of all, we're just going to get started by what we advise our clients when it's time to get ready for tax season. We really start advising our clients by the third, fourth quarter of the year prior to your tax filing deadlines. So generally in September, October through December, we're talking about all these things. We're asking people to go and set up their personal IRS accounts to make sure they can access their IRS transcripts and access their identity PIN if they have been given identity theft pins by the IRS. This has been a big push by the IRS in the last few years because of identity theft issues. They're issuing pins to individuals saying, in order to file your tax return electronically, you have to input this ID pin into your tax return. If you receive the pin from the IRS and you don't put it on your tax return, your e-file will be rejected. And we've seen this happen. Someone not realizing the IRS had mailed them a pin because they see a letter from the IRS, and for some people it gives them anxiety and they don't open it. And in that letter was the identity protection pin, which was needed to file their tax return. So now their tax returns, while we can get it done and we submit it, it gets rejected by the IRS, which means the IRS will not accept the electronic filing. And the last thing you want to do is mail a return to the IRS, because we've seen those not been responded to in a matter of a year or two when it came to mailing documents to the IRS. So we want to do the electronic filing if you can. you want to get online with the IRS, set up your IRS account through Real ID Me. Go to www.irs.gov and set up your personal account, because through that you can access any identification pins that they've issued to you. You can also access your IRS transcripts, find out what's been reported to the IRS regarding you personally and your business by having that access. Because the IRS will look at what they've received in their system, and they're going to look at any tax returns we file and where they're going to compare the two. They're going to say, are they reporting all of their income? And they do this by comparing the 1099s they receive and your social security number, as well as in the business tax ID number. And they compare that to the returns to see if all of that income is reported, and that allows them to red flag you for potential audits or other issues with the IRS if it shows that we're underreporting income. I mean, they have nothing to really measure your expenses but they will measure your income to what's reported to them. So if you're taking credit card payments, you're receiving a document called a 1099-K. Copy of that document also goes to the IRS, and they're going to look at that. They're going to compare it to the returns to make sure we're not underreporting income. So again, set up your IRS account, engage with a tax professional. We recommend by the end of the year, because we always like to see some level of tax planning going into tax preparation, and not just someone who takes your forms and take your numbers and pull together a tax return, but really understand your financial situation and help you plan for that tax return and help you plan for that tax liability. If you owe the IRS and you're not able to pay right away, there's options to that. There are installment plans that we can file for with the IRS, and there's also ways that you can pay the amounts that due within a 90-day period without having to have an official installment plan. So by all means, let's spend some time looking at this and reviewing your situation rather than just filing your tax return. And then our next step is making sure you gather all your income and expense documents. Your W-2s, your 1099s, if you have businesses set up, hopefully you have a separate business account for those business, and you can link those business accounts to your software if you're not using an accounting software, something like QuickBooks, Xero, or Wave. Just link it to your bank accounts, download all those transactions. If you don't have a software, at least work with us to download those transactions into Excel, because we can use Excel to sort the data and develop financial statements for your business through the transactions downloaded into Excel from your business bank accounts. Same thing with any credit card purchases, any major capital purchases for your business. And gather anything for your personal, like dependent care expenses, any dependents that are on your tax returns. The IRS are always also giving a closer look to dependents. They're even issuing identity protection pins for dependents as well that are on your tax returns. So if your child has received an IP pin, please pass that information along to your preparer so we can put that in the tax return and make sure that tax return is not rejected due to a lack of a pin. Also, it bears mentioning, I'm just going to mention the beneficial ownership reporting, BOI reporting, because I think we've talked ourselves blue in the face about this year, because it was such a surprise that hit all of our small businesses earlier during the year. And we complained about this to our local legislature, to SBA, and anyone that would listen on what a burden this was on the small businesses. Well, and somehow that information finally penetrated, because here they are, they've changed the BOI reporting now that it only applies to foreign entities. It no longer applies to our US-based small businesses or our domestic companies, which is what they were targeting before with this act. And they had our small businesses subject to fines up to $5.99 a day for not filing, up to $10,000 total. And of course, we championed our businesses about this act being detrimental to our small businesses, and eventually the U.S. Treasury got some laws passed to remove this reporting requirement for our small businesses. So now it only applies to the foreign entities. And again, our U.S. businesses are no longer subject to this fines and penalties from the BOI reports. And so now we're going to move into talking a little bit more about your taxable income. So when you're gathering up your documentation, we want to make sure you think of everything that's happened financially for you during the year. Because what we don't like to see with their clients is when they're rushed to get this done, they get whatever they can get their hands on, and then realize that they didn't receive maybe a 1099 from one of their contracts, or they didn't receive a W-2 from an employer, and they go ahead and file their tax return and determine there's a document missing. And though you may be missing that document, it's likely that the IRS has a copy of that document. So the first thing they'll do is they will amend your return themselves. They'll adjust your return. They'll include that document in there, but they'll adjust it to their benefit. So if there are deductions you could have taken against that 1099, the IRS is not going to take deductions for you, but they are going to add that 1099 to your return or add that income to your return, and they're going to send you a tax bill. So what we want to do is make sure we take the time, we look for all of our documents, make sure we have everything. And we do our analysis by comparing your current year return to your prior year, just to see how things have changed, what you reported last year versus what you're reporting this year, to see if we can determine if anything might be missing just from that review. But the things you want to think about is your different W-2s from any employment you had during the year, any 1099s you received as an independent contractor. Even if you didn't receive the 1099, it's still your responsibility to report that income you received as a 1099 as a contractor. So look for the 1099s you received, and even if you didn't, look through your bank account and look at the deposits you received from any contracts that you did as an individual under your business. Same thing with any IRA or 401k distributions you may have taken during the year. HSA distributions, that's one of the most overlooked ones I think that we see during the years. People forget that they didn't realize they received a document saying that they had an HSA distribution. Well, the issue with HSA distributions are they are not taxable as long as you spend it on eligible medical expenses. However, if you leave that off your return, the IRS will add it, and they'll not deduct as if it was spent on eligible expenses. They will automatically assume that it was not spent on eligible expenses, and they will make it 100% deductible, 100% taxable, when really it should not be taxable at all. We fix a lot of these returns every year where we go back to the IRS and we amend the return. We said, okay, we're taking this distribution and we're putting it back on as non-taxable versus taxable. So make sure we have all those documents and we can get that on the return the first time around. Same thing if you have any rental properties. Actually, if you're a business and you pay rent to anyone, you're actually supposed to issue 1099s to your landlords for rent. Lots of people don't understand that, don't realize that, and they don't do it, but it is a requirement. Same thing with any stock trades that you have, any capital gains from stock sales, interest, dividends. Another common one that we're seeing is interest from the IRS. So if the IRS owed you a refund and that refund was not paid timely for whatever reason, maybe you extended your return and you filed at a later time, and when they did issue your refund, they added interest to that refund, and then at the end of the year, they sent you a 1098 interest statement or a 1099 interest statement saying you had interest income. They're expecting for you to report that interest income on your tax return, and they will catch that if you don't. So please make sure you look through your documents if you had any interest income, any dividends. If you had unemployment during the year, unemployment is taxable. So the state will send you a 1099-G document that we have to include on your tax return for any unemployment income you receive. Same thing with any royalties and other such things you might have done as any gig working on the side, any Ubering, any things like that. We want to report those as a Schedule C as if they were their own business, and we want to take the appropriate deductions from that income so we can minimize your tax liability. So again, just it bears to repeat, just a quick recap of our sources of taxable income. We have our W-2s, which most of us are familiar with, which is the most common source of taxable income. But then we have our 1099s for anyone who's independent contractors, which means you're not technically an employee and you don't have any tax withholding likely from the income that's paid to you. Same IRA, 401k distributions, HSA distributions that we mentioned. Any rent 1099s to receive, you have rental property and capital gains from stock sales, interest, dividends, unemployment, and royalties. So generally, a lot of what we deal with are people with small businesses. So I like to discuss financial framework for those of us that have a small business or have a LLC, even if it's a one-owner LLC and you're a team of one, just making sure your business is structured correctly. You want to look at the best structure for your business. There's different implications for your business structure. There's your legal structure and there's your tax structure. And technically those can be two different things. And depending on your level of income, and your tax planning, you might want those to be two different things. For instance, if you have a one owner LLC, you're going to pay some of the highest tax rates you're going to pay with any business structure, because you're not only going to pay taxes at your individual tax rate, but you're also going to pay self-employment tax, which is another 15% in taxes in addition to your personal tax rate. So what we do is when we see the income reaches a certain level, we do an analysis to determine if you will benefit from tax savings by making an S election and being treated as an S corporation for tax purposes. So if any of you are one owner LLC or even a partnership and you want to go through the analysis to see if it'll be beneficial for you to look at an S election and be taxable as an S corporation, we'll be happy to work with you during the year and do that analysis and determine how you should file for your business in the future. So when we talk about financial framework for your business, we start off talking with your structure, your legal and your tax structure, because it's the basis for what everything flows from. But then the foundation that that basis sits on is your record keeping. Do you have good record keeping? Do you have that separate business bank account? One of the main sins we see with small business owners is the commingling of funds, just letting their 1099 income or their business income go into their personal bank accounts. And so when it's time to determine and to develop business financials for them, we can't separate the personal from the business because it's all commingled in one account, and we don't really want to see that happen. So we want to start off with a strong legal and tax structure. You want to make sure you have that separate EIN number for your business, because every time someone wants to issue you a 1099, you really don't want to have to give them your social security number if you can give them a separate EIN number on the business. So you want to make sure you have that structure in place, the separate EIN number, good record keeping, the separate business bank account, and you're keeping some type of books on your business. We like to see you set up with some type of software like QuickBooks, Wave, Zero. We can help consult with you and determine which software will work best for you. We'll help you set up that software. And if you want to do your accounting yourself, we'll even help train you on how to work within that software and do your reconciliations to make sure you have correct data that we're looking at the end of the year when it's tax time. So while we're talking about taxes, I just want to visit a little bit on the actual standard deductions. Assuming many of you know that you have an option when it comes to filing your taxes. You can either take the standard deduction, or if you can come up with enough expenses under itemized deduction, and your itemized deductions exceed your standard deductions, you can itemize your deductions when it comes to, and the standard deduction is the amount that's taken off of your income before you start to pay taxes. So for instance, if you made $50,000 during the year, you file as head of household, you're going to get $21,900 taken off of that income before we calculate your taxes that are due on your income, and that's called your standard deduction. So for single individuals, it's $14,600. Married individuals, $29,200. We also do a married filing joint and a married filing separate analysis for our married couples to see what benefits them the most for taxes. Like we said, we're not really into just preparing your taxes. We're into tax strategy and tax planning and having that discussion with you on what works best for your situation, because it's not a one size fit all for everybody. And so we work with all of our clients to figure out what works best for them. And so now that we talk about what works best for our clients, we want to talk about what we do to try to help save you in taxes. One of the things we look at is, how do we decrease your taxable income? Are we maximizing your deductions? Are we getting all your dependents that can cause credits for you on that return? Have we taken a look at your legal structure, your tax structure, and advised for what's best for you and your business? And then we look at things like timing. Do we need to put your business on a fiscal year structure versus a tax year? Do you have several businesses, and we have a combination of calendar year and fiscal year, because we can control when income is recognized and taxable to you, especially if they're flow through entities or a combination of S corps and C corps, to help minimize your taxes. And so again, because our deadlines are right around the corner, we're just going to quickly visit the individual deadlines. I think most of us know that our individual tax returns are due April 15th, but it never fails to surprise me how many of my business owners don't realize their business taxes are due at different dates. So if you have a partnership, which means you have an LLC that has more than one owner, then the IRS recognizes you as a partnership and they're taxing you as a partnership. Those returns were actually due March 15th, as well as our S corporations. If you have an 1120S that you file, you have an S corporation or LLC that you make an S election with, that was also due March 15th. If you have a C corporation, you file 1120, the C corporation is going to be due the same deadline as your individual tax return, which is April 15th. Now, each of these deadlines can be coordinated with an extension or an extension for that due date. But I'd like to remind people that an extension to file is not an extension to pay. So if you know you're going to owe taxes on your tax return, you can always extend and give more time to do the filing, but the taxes that's due on that return is still considered due as of April 15th, which only means that the IRS is going to add interest and penalties for any taxes that are not paid by April 15th. So if you extended to file your tax return and you get a 6-month extension and your extended due date is October 15th, and we file that and say you had $5,000 due in taxes, it's now going to be $5,000 plus any penalties or interest the IRS can add to that, even with the extension, because the taxes were technically still due April 15th, even though we did an extension to file the return later. So, which is why we like to work with our clients. We like to go ahead and work up your return, have it done by April 15th. And even if you want to stop and gather more information, we can extend that return, but we can advise you on what you currently owe so you can make your payment by the 15th. And we can continue to work on the return to see if we can reduce that tax liability and do the final filing by the deadline. So again, it's important to get on the schedule now, to use that link to get scheduled so we can have that consultation. We can talk about your individual situation and see how quickly we can get you ready for that tax deadline. And so we talked about the individual deadline, April 15th, our partnerships and S Corps were March 15th. So if you haven't filed your S Corporation or partnership, it's technically late. And the IRS does charge a penalty for an S Corporation. They charge $250 a month per owner. So if you have an S Corp that has 2 owners, the IRS is charging you $500 per month that return is late. So if you were due March 15th and you haven't filed, please reach out to us now and help, and we'll work with you to get that in as soon as possible, at least by April 15th, to get that corporate return in, so you're not continue to accrue penalties and interest with the IRS. If you run payroll for any of yourself as a business owner or your employees, those W-2s were due January 31st. Hopefully, if you're running payroll, you're using a qualified payroll service, which they would have had those W-2s to you well before January 31st. If you have any foreign bank accounts and you have to file an FBAR report, that is due with your return on April 15th. And so you want to make sure you're getting those filed as well. You don't want to get on the IRS list for having foreign bank accounts and not disclosing and not filing. So please give us a call and we'll talk about how we can make sure you get caught up and current for all of your deadlines. I think it also bears to repeat to discuss how we decrease your tax liabilities. We talked about trying to decrease our income by maximizing our deductions, which is something we include here as well. We look at things like tax credits, your legal structure, your tax structure, the timing by using multiple entities and multiple either calendar year dates for your entities or fiscal years. Also, we looked at different options for tax deferred vehicles. Are you maxing out on your IRAs, 401ks, monies you can put aside tax free? And then are you minimizing that self-employment tax? If you're a single member LLC, can we use an S Corp to minimize and save you in that extra 15% in some areas? Are you maximizing your deductions? Are you investing in special depreciation items? Those are one of those areas that we're going to lose that ability and that deduction to do so unless our administration acts pretty quickly before the end of next year, where you can go and buy a vehicle over a certain weight and you can deduct 100%, 80 to 100% of that vehicle in the year of purchase, which means you can go and finance something that's can be considered technically equipment for your business. Say you financed a $40,000 piece of equipment, you're paying an installment loan on that, which means you may have only paid a few hundred to a few $1,000s in the first year of purchasing that equipment because you're paying for it over time, but you're getting out of that a $40,000 deduction on your taxes. So if you're in the 30% tax, 25 to 30% tax bracket, you might be saving $10,000 to $12,000 on that purchase that you made, that you've only paid a few $100s for because you're going to pay for it over time because you used the tax strategy to invest into special depreciation items. Those are the things that we want to talk to you about during the year, and we want to wait till tax time till it's too late to take advantage of some of these options. So please, again, schedule with us, even if we talk this time around and we're just talking about the upcoming tax deadline. We want to maintain that relationship with you and consult with you and talk with you throughout the year so we can prepare for next year and what's to come for our small businesses right now. Because we know based on what's going on in our economy, something's going to have to be done for small businesses. We're going to have to invest in our small business. They create our jobs. And so that's something we want to make sure our small businesses here, whether you're in the Atlanta area or whatever state you're in, because we work with many clients remotely, we want to make sure you're prepared to take advantage of what's to come. And we started off talking about your foundation is good record keeping, and we talked about that business bank account, keeping that separate, having some accounting software, linking those two, making sure if you accept credit card payments from your clients that you're recognizing that you're getting a 1099-K from your credit card processor, and that 1099-K is it's going to report all your credit card receipts for the year. So if that 1099-K comes in and says you have 120,000 in receipts during the year, but say you go and you report on your Schedule C or even on your S corporation and you're only reporting $80,000 in income, the IRS is going to consider that underreporting of your income, and that's something that's going to give a red flag on your account with them. And so that's one of the things that we do when we work with our clients. We gather all their 1099s, their 1099-Ks, and we do a comparison of that to their, not only their bank records, to the numbers they're reporting, because it's possible to have a 1099-K that's higher than the deposits you receive. And that's because oftentimes those processors take their fees out before it's deposited to your account. But what we like to do is we like to gross that number back up and make sure you're reporting the full amount from your 1099-K on your return. And then we just go ahead and take those processing fees out as deductions. So even though you didn't receive the cash for it, we're still netting the same number, but we're showing the full amount of the sales. So the IRS doesn't look at you as if you're underreporting your sales number. And then, of course, your financial reports. You want to make sure you have financial reports on your business. Even if your business is only a Schedule C on your personal tax returns, can you produce a balance sheet, a profit and loss for your business, and a cash flow analysis? Not only are these reports important for you as a business owner in making decisions and managing your business, it's also important for you as you go to your banks to get funding for your business. If you're going to get loans or you're looking for future investors for your business, they're going to want to look at those financial reports, and they're going to want to know that you as a business owner understand what those financial reports are saying about your business and that the story lines up to your narrative. And that's something that we work with our clients on all year long. Again, we talk a lot about taxes because the tax deadline is coming up, but we also work with our clients on the importance of just compliance, making sure your business is fully compliant. I mean, tax reporting is one thing, but there's other reporting that you have to do during the year that is above and beyond your tax reporting. If you have a business within a state and within a particular county and you're licensed in that county, chances are you have to report on your personal property report for your business that you're reporting your county. So if you have no assets in your business, it's okay to report 0 assets on those reports, but report to them. But what's not okay is just not to report on it at all. You still have to file those reports with your county, and it's important for your licensing and keeping your business compliant and making sure you're not going to your Secretary of State website and finding out your business has been deactivated or is no longer current with the state because you hadn't been paying attention to the documents or reporting requirements that they have. And so that's why we like to work with you on compliance to make sure you have a viable and compliant business throughout the year. So since we are coming up into a new year will be here. I mean, tax season was here on us before we knew. So we know the new year will be here before we know it. So there's several key tax provisions that'll be expiring at the end of this year. They're scheduled to expire in 2025 unless our administration takes action, which I believe they will, or I hope they will. A lot of the provisions came from the Tax Cut and Jobs Act, which is TCJA, and they were due to expire at the end of 2025 unless action is taken. Things like the special depreciation we mentioned and other credits that a lot of us have come to depend on with our child tax credits, our electronic vehicle credits, those will all need action to continue for us to use that from year to year. Same with our tax rates and brackets, getting updates on that annually takes our administration, our Congress to pass certain laws to get those updated. And so our biggest issue is our bonus depreciation, something we don't want to see lose because it's been such a benefit to a lot of our small businesses. And again, your accounting and bookkeeping is the foundation for getting all of this information and making sure it's in one place and making sure we can report it in a manner that we can communicate the financial status of your business to the different lenders, to your different investors, and just even to you as a business owner, so you understand how your business is operating and how well your business is doing. You should be able to look at the services or the products that you sell and determine what lines are most profitable for you as a business owner, because that's what you want to invest in. That's what you want to grow in the future of your business. You don't want to move forward with your loss leaders. You want to make sure that you're investing in the areas that's causing you the best profit and customer loyalty that your customers are asking for and that your need, and that is still profitable for you. And that is part of the business strategic advisory services that we provide on the financial side as well. So we're going to move on to that and to just kind of look at, I think often we talk about taxes and we don't think about what our tax brackets look like. So this is an example of individual tax brackets. So when we talk about a pass-through entity, that's an entity that's being taxed at your individual tax rate versus a corporate tax rate. So that's our LLCs, our S corporations, and our partnerships. When those produce income, that income shows up on your personal tax return, and depending where your income level is, it's going to be taxed at a rate anywhere from 10% up to 37%. And that doesn't include self-employment tax. So if you have to pay self-employment tax on top of that, we're talking about 10% plus 13% self-employment, or 37% plus 13% self-employment. So now we're talking about 23% to 50%. So if there's a way for you to minimize that tax rate, don't you want to make sure you're making the most out of your current business structure and your tax situation? Well, that's what we're here for, so we can advise you on that. And so if you have a C corporation, C corporations have a tax rate of about 20%. And so we want to make sure that if you have the opportunity to minimize your taxes, say you're at that upper tier at anywhere from 35 to 50% tax rate with self-employment tax, and we can save you 30% by moving some of that income to a C corporation. And maybe that's money you were going to invest back into your business anyway. So if it's money you want to, someone asked about an LLC due date.
Lisa, and pull it back
Okay.
up again. It didn't, it took down your share.
Okay. Yeah. There we go. So again, we were just going through those individual tax rates so we can understand the consequences of these pass-through entities. But I am going to answer the question I saw come across. Someone said, when's the due date for my LLC? The answer is it depends. It depends on the structure of your LLC and how many owners that it has. So if you're a one owner LLC, for tax purposes, you're considered a disregarded entity, which means that LLC doesn't file a separate tax return. It files the income under your personal taxes, which means the due date is going to be April 15th when your personal taxes are due, which means you have to report that income under a Schedule C that shows up on your personal taxes. But you do need to know from your EIN letter from the IRS how the IRS sees the number of owners on your business. Sometimes married couples don't recognize that once they put both individuals on the business as an owner, your business went from a one owner LLC to a partnership, which means you have to now file a 1065 form, which is a separate tax return for that partnership. And let's see, I'm going to scroll back to our due dates. Okay, yeah, back to our due dates. So you can see here our partnership form 1065, those were due March 15th. Our individual tax returns are going to do April 15th. That'll include our single member LLCs without any special elections. But if you have an S corporation or that special election, that was due March 15th along with your partnership tax returns. So the answer for the LLC is if you're a one owner, it's going to be due April 15th. If you have more than one owner, it was due March 15th because you'd been considered a partnership. If you filed a special S election to minimize your self-employment taxes, that was also due March 15th. So now I'm just going to drill back down to where we were. We were looking at our tax rates. And then I'm going to take a moment, just touch upon our dependents that are on our tax return. Just be aware that your dependents need to file a tax return if they have earned income that exceeded $14,600 in 2024, or if they had unearned income of $1,300 or more, they need to file their own individual tax returns. Not that you can't claim them as a dependent, you can. They'll have to file a tax return indicating that they have been claimed as a dependent because they've met one of these criteria or more. One or more of these criteria. So just be aware with your dependents. And then also we're seeing a lot of identity theft concerning dependents. People you may have disclosed and allowed to carry a dependent on their tax return before they have your child's social security number and information, and they're going ahead and filing a return, including that child on their return to get the child tax credit. Please, if you have shared your information on your children with anyone and they may have filed for your child incorrectly, get an identity protection pin for that child, because that'll stop anyone from being able to include your child on their tax return unless they have that IP pin. So go ahead and either try to file your return as soon as possible to make sure you're the first one to include your child, because once a pin has been included on a return, any return that comes after that tries to claim the same dependent will get rejected. Now, we see this happen with people who rightfully claim their own dependents. They go to file and they get rejected because someone else has already claimed their dependent. So for those, please try to get your returns in as quickly as possible, or file for an IP pin with the IRS for your dependents to protect their identity and protect them from being included on someone else's tax return. Again, we want to just kind of, as we get close to the end of our evening, just talk about the opportunities that may show up in our, hopefully in our near future. Things like economic stimulus payments, which there's been some talk of, but no movement on. Grants and disaster loans, which we haven't seen. There was, with some of the federal disasters we've had, we've seen some disaster loans implemented, depending on what area you're in. Just be aware of what's going on in your area. If your area was declared a disaster, you might be eligible for some grants or disaster loans from there. Also, credit advances. I think Jared can talk to you in depth about what's available as far as business loans and lines of credits that he has access to through some of the many programs that he operates under the SB Nation. So please, as you're operating your business, sometimes our business just needs a little injection to keep going. Please reach out to people and find out what's available for your business, which you can utilize to set up your business during these difficult times to be successful in the future. And again, I'm not going to go into this too much because we touched a little bit about it on just about every slide we went through. Is your business structure, your tax structure versus your legal structure. You want to know how you can maximize that. There are many structures you can choose from. There's the sole proprietor, which is the simplest structure there is. Also, one of the highest tax rates there is your sole proprietor LLC. There's our corporation, which can be a C corporation or an S corporation, depending on the tax benefit for you. We can help you determine what's best for you there, as well as our partnerships. I'm just going to end with this. Because I talk so much about taxes, I just don't want to give any of my clients the wrong impression. Yes, I focus on taxes because it's one of the things that I do. But when it comes to your business and you as a business owner, when I work with you during the year, I spend less time focusing on your taxes and more time focusing on your business operations. What's coming in income-wise? What are you expending the dollars on? Are you investing appropriately in your business? Are you taking the right amount of distributions as a business owner? Are you paying yourself a payroll as a business owner? Are you investing back into your business? Are you splitting those profits in your business in a format that's going to benefit your business long term through reinvestment, through investing into yourself as the business owner, investing into your team to make sure you have the right team around you to grow your business and the resources around you to develop your business? I think JR can talk to you in depth about all of those things. I just want to kind of end our evening with the kind of that strategy of where to focus at when it comes to your business. And I also want to talk about just some of the tax specials that we're having, just as with our CPA firm, because we focus on business advisory. And a lot of our small businesses have limited budgets. We put some specials in place specifically for the SB Nation, a $250 a month CPA business advisory services, where we can work with you all during the year and during the month on the financial aspect of your business, on the financial advising of your business, making sure you have accurate business financials during the year, and help you structure to make sure you're accessible to get loans and investments in your business. And then for those of you who has a little bit more activity in your business and need more outsourced monthly bookkeeping, we have a $3.99 a month special rate where we'll set up your books on the software. We'll train you on the software, show you how everything is done, and we'll take care of your bookkeeping each month, and then sit down with you each month to go through your business financial statements and understand what's going on with your business, how your business is operating. We do a pricing analysis where we determine if you're pricing your services and your products appropriately to produce a profit for your business. And so that's all included in our monthly bookkeeping services, as well as our CPA advisory services.
And this,
So
and this
again,
is,
I put a link in we put a link in the chat, I think a couple of times. Please reach out, please click on that link and get scheduled with me. Again, our consultation is going to be complimentary, just going to talk about your specific situation, what you need in your business, and how we can help and what we can do to help you get you where you need to go. Again, I'm Lisa Laday, CPA with SMB Tax and Accounting. It was great to talk with you guys this evening.
and most definitely, guys. And let me say this, Lisa, that was great. That was a great presentation. I know I always am up for anything that you are teaching and rolling with it. And let me say this, guys. So I put the link back in there. That's a free thing. And this is the whole thing. Like, some of you guys right now, we can talk about the ongoing stuff later, but some of y'all just need to get your taxes done. So I don't if I didn't know Lisa and somebody introduced me to her, I would make sure I do whatever I can to come in here and make sure that she can help me, because I always go with the person that knows more than other people when in a particular subject. Because I'm like, hey, it's just like, oh, you know what? I studied under this person, boom, boom, boom. And then it's just like, well, man, let me go to the person who they study under, right? So instead of you saying, hey, you know what, I'm going and doing X, Y, or Z, no, you need to go directly to the source, and that's really really important, guys. So bringing all that up to say that, hey, I put the link in the chat. You guys got this here. And what I'm telling you is that don't try to file your taxes yourself. Don't call me later. Don't send no emails to us because you done jacked stuff up that you was trying to do when we told you ahead of time. Like, for you guys to try to get some help, and then y'all are calling us like, oh, this happened with my company, da 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 da, and then and you just jacked up. Somebody said, and I don't know if you had answered this, Lisa, but somebody said, if you have a new business with no revenue but have invested a lot of money, do you file taxes for the business separately, or do you or do a Schedule C on your personal taxes? Well, first off, what kind of business is it? Is it a corporation? Is it a sole proprietorship or an LLC? That's going to depend on what you file. But this is the whole thing. You want to make sure that you guys are filing, because if you haven't made no money but you're spending money, a lot of times that money can be used and you can get money back just because it decreases down your taxable income. And so and so Lisa, could you go in and just elaborate on that?
I'm glad you brought up that question, because that's one of the reasons that we often recommend people to start with an LLC, because generally in your first year or two in your business, you're going to be dealing with it's more common that you're going to be dealing with some business losses than a whole bunch of profits within the first couple of years of your business. Where if you're a single member LLC, you can at least put those losses to use, as JR said, by offsetting some of your other income that's coming in through W-2 if you're working a job on the side or anything else that you're doing. However, if you start off as a C corporation and you have losses, those losses are not really benefiting you very much in that C corporation just yet. And so we often will tell you start off as an LLC, and then we have the flexibility of changing that structure as time goes on with the special elections.
And this is the thing, guys. What I'm just trying to mainly say, I use a lot of corporations because of my income and things that we're doing, and it's just a better, to me, a better a vehicle for lending when we're looking at receiving funds from things that we have went to a lender looking for lending, or if we're looking at whatever we're doing, that corporation to me has a much stronger presence, even when you're going about building up things like corporate credit and or business credit, which are different things on that end. I love my corporations because of the fiscal years. I can set my entities up on fiscal years instead of which means like everybody that has a other entities, they have to really file it on the time designated. I can because I can set my fiscal year any at the end of any month during the year, and that gives me greater tax flexibility, right? In addition to,
Yes.
there's many other things that I can utilize to make that happen. But I'm gonna tell you this: most of y'all ain't making enough money to even have that be an issue. I hear people all the time saying, "Oh,
Yes.
JR, I heard I need a trust." I said, "Have you made any money?" Not yet. And I'm like, well, you don't need no trust. You know what I'm saying? Like what you need a trust for? You gotta have some money to put to have something to protect, to put that stuff in. You ain't making
Yes.
enough money to do nothing. So listen, guys, I'm just saying that I see people on the internet, people and I see a lot of people talking about the Augusta rule and all this kind of stuff. And it's like, okay, y'all ain't even got nothing to be an Augusta for. You know what I'm saying? I'm bringing this
Yes.
up to say that you guys, the main thing we have to focus on in any business is making money. Okay. And so when you're and that, but when you've made that money and you're figuring out ways to make sure that when you're spending this money, hey, that I'm getting the right amount of monies back so that I can then reinvest that money back into my business, right? Like these are
Yes.
things so that I can go out and start making more money. This is why you need to sit down with somebody like Lisa. When you're looking at trying to make that money, this is when you need to be connected in with us. And that's really how it works. I really help the people make the money. Lisa helps to make sure that you good once you made that money, to make sure that that it's right, and when you're spending that money, to make sure it's accounted for, so you're not so that you're getting the proper refund is due to you if you've overpaid in certain things, and you have deductions in that way, or that you're not paying too much money that you know unnecessarily to the IRS. I've had people that I've known who made a lot of money and had to pay the IRS a lot of money unnecessarily. I believe that the IRS should you should pay the IRS no less or no more than is due. It's not no noble thing to pay the IRS more money than necessary. But you have tax code and tax law that's there to help you to maneuver that, right? And so these are things that are very important, and you guys just need to understand this when you're making things happen. So we are going to be our next session that we do is going to I don't know if we'll have it at the end of this month or we'll do it at the beginning of the next, but we're going to do a networking session. We're going to do a networking session for you guys to get on here and network. And this is the whole thing, guys. If y'all got businesses, like, come on, like, look, this is the whole thing. I pay for this, right? I am paying for this. All of these sessions that we're doing for you, right? I am paying for this. I am paying to deliver these things to you. What I'm saying is like, I want you guys to start doing stuff with it. I want for everybody to come in here and say, hey, you know what, JR, I made an extra $10,000 this month. Hey, I made this happen. Hey, I got my first customer. Hey, you know what? I got my website in place. I'm ready to go. Hey, JR, I need a website. We have business services through Velocity Business Services that we can help you with on this. And as I mentioned, we got all kind of phenomenal software that we'll be getting to you. Some of that will be free. Some of that you'll be able to get at discounted rates. But I'm bringing all of this up to you just to say that, hey, this is in your hands, guys. Like, if you're not making the amount of money that you're making, that's on you. You have to make a decision to say, I have to start making decisions to make sure that happens. A lot of you guys have gotten your tax refund. Hey, some of you guys are going to get tax refund money. Some of you guys have gotten money from here or there, and you're like, what are you doing with it? You're going and blowing it. Take your seed money. I call that seed money. Don't eat it. Put it in the ground, water it so it can grow up and produce a tree that's going to bear fruit. You can eat the fruit, guys. What I'm saying is make sure that you're taking your resources and spending them effectively to get a return. Do y'all understand what I'm saying? Like, this is so important. I see this so many times. And this is the thing, guys, like, I'll like how many, if you're not making $1 million, okay, in your business, I want you to put it in the chat. I'm not making $1 million in my business. Okay. I want y'all to do that really quick. Put in the chat if you're not making $1 million in your business. Okay. And that doesn't, I'm not talking about $1 million sitting in the bank. I'm just talking about $1 million in annual revenue. Okay. And you can put it in the Q&A here too if you don't want to put it in chat. So okay, you're not making that, right? So why is the question? Why aren't you doing that? Like I said, I'm not saying that it's easy to make $1 million. Okay, what I'm saying is that, do you know how to make $1 million? And if you don't know how to make it, why not? Are you spending money trying to figure out how to get to that point? And like I said, what I'm telling you guys is that the $1 million to me is just not some magic number. It's a good place. That doesn't mean if you're making $1 million a year, okay, it does not mean that you're if you're making $1 million a year, doesn't mean that you're a millionaire. What it means typically is that you're doing well, right? And if you're making that $1 million, if you're seeing 30 to 40% of that in a net profit, that means you're putting $300,000 to $400,000 in the bank at the end of the year, guys. That's where you want to be in the business. People say, well, I just want to make $100,000. Okay, but let's just say hypothetically that you only make a 20 to 30% profit. You're only seeing $20,000 to $30,000 of that, right? Can you live off of that? Right? Can you operate off of that? Some of you may be able to, but what I'm saying is our goal and our objective is to get as many businesses to the point to where they're not struggling to make ends meet, that they have excess money to do various things on this end. And that's typically at a annual revenue point of $1 million a year. Okay. So if you need help getting to $1 million a year, right, make sure that you're in these sessions, right? We have other things like we're in the middle of an incubator right now. We just started it. Actually, last week was the first week. Okay. We're rolling through. We're going to do a pitch at the end. So sometime next month, early next month, we're gonna let these entrepreneurs come in and pitch their companies, right? And so our goal, some of them are going from just having an idea to just first setting up their businesses and getting ready and getting sales. Our goal is to try to get them to sales as soon as possible. A lot of them are coming in not even thinking about sales. They thinking about everything else. Oh, I want to do this because I want to do this. I want to do that because I want to do this. And it's just like, okay, so like, but I love to do it, JR. I'm passionate about it. It's like, okay, but is it making any money for you? Well, no, I don't care about making the money. I just love to do it. Look, I'm gonna tell you this. I love to do a lot of stuff. Okay. I love spending time with my family. I love spending time with my kids, my wife. I love traveling. I love eating. I love sleeping. I love watching movies. I love stuff like that. Right. And I'm saying I enjoy my work. But to say that, hey, you know what? I'm doing this and I'm just working for free, like that's crazy. Like, like you if you're gonna do this, make it make sense. Okay. And this is what I'm saying. Like, why can't you help people and make money at the same time? Right? Hopefully on your job you're doing that. And if you're not doing that, hey, maybe you say it's time to change jobs. What I'm saying is that we're out here, guys. People out here need our help. We have solutions that can help people, right? And if you're not in a place where you're really helping a lot of people, we need to help you where you can. You don't have to help a lot of people to make $1 million. You can help one person who pays you $1 million. Or you could help 10 people that pay you $100,000 a piece. Or you can help 100 people, okay, that pay you $10,000 a piece. Okay, do y'all understand what I'm saying? Or you can help 100,000 people that pay you $1,000 a piece. Y'all get what I'm saying? Like that's what you need to get to $1 million, right? So it doesn't require you helping a ton of people. Now you could help 1 million people by selling them something that's $1 a piece. That would also get you to that $1 million mark, right? And it's just really going to depend, right? So what I'm trying to say to you guys is that I want you guys to understand and know that it's in your ballpark, it's in your control to make this happen. And so what I'm saying is if you're here at tax time, you haven't got somebody to help you with your taxes, talk to Lisa. If you need to help get to the point where you are making significant money, here I'm gonna put the email in to this is our email to the company email. Okay, info at the sb.net, and you guys can and you guys can actually have an opportunity to get in touch with us and roll and go from that point on this end. So that's it, guys. I think do we have any other questions, guys? I have I'm here and I have a little person here having a good time with me right now down here, pulling down all my lights. Y'all see my lights just automatically went out. It's because I got a little 2-year-old little tiny man beside me just pulling down lights. Okay. But anyway, guys, we appreciate y'all. I try to get y'all out of here, like I said, about 8:30. We get in here, try to get in here the hour of power, as we say. Sometimes we go in a little longer because we're doing a little bit more Q&A. If you have any other questions, put them in the Q&A. We'll be able to answer them. I'm going to put this back in the chat again. This is Lisa's link right here. If you need to go about getting some help and assistance on this end. If y'all know, also in the SB Nation. So if you're a part of our paid community in the SB, then you got all kind of media library. It's unlimited kind of stuff. Hundreds of thousands of dollars worth of training that will make you a ton of money just by going in there and watching those trainings. I had people that came in 1-to-1 training, guys. The next day she went out and implemented and made an extra $10,000. And she said, JR, it was just one thing that I learned where I was able to go out there and I made it. And I said, and that's the whole thing. It doesn't take a lot of stuff. You don't have to know everything. Like my pastor used to always say, JR, you don't have to know everything. You just have to know more than them. And so what I'm saying is a lot of you guys could be considered experts, but you don't even, but you think that you don't know enough. And you have imposter syndrome, thinking that I'm not good enough, I don't know enough. A lot of you guys are working in places right now that I would pay money if you have a service that I would pay you money. Okay, if it's a way that you can help me, I would pay you money right now. Okay, and so let me see. Somebody said, Angel said, what documents need to be sent to the IRS if you have an LLC? It's a trucking company. So you're saying what documents? Like, I'm not sure what you're asking. You need to file your taxes. So what I would say is if you have a company,
and it's also
like I
depending
said,
on your operations. If you're paying truckers via 1099, you need to
Lisa,
send 1099
your
to them.
volume's down some. I don't know if you can turn up your volume.
I don't know if that's better, but yeah,
That's-
for instance, if you're paying truckers via 1099 or W-2s, there's certain things that have to be filed for that. That should have been filed in January.
So this is what I'm saying, guys. So listen, stop trying to figure this stuff out yourself. And I'm gonna say this again. Stop trying to figure out this stuff yourself. I'm gonna say it one more time. Stop trying to figure out this stuff out by yourself. Like, let's just say you pay somebody $300, and depending on if you're getting a refund, that's money that I've had somebody spend $300, okay, and this is my little man. This is Daniel. He just loves to come on in the picture. So if they're spending if you're spending $300 and they get you back, to where you may have been paying had to pay $6,000 in taxes, and they get it back to where you have to pay $1,000. Okay, you save $5,000. Okay, so when you minus that off of the $300, you save $4,700. Okay, this is what I'm saying. Like, a lot of this stuff just doesn't make any sense for us not to. So just make sure that y'all doing this. What documents should I have when I'm going to do my taxes in regard to the business? Oh, if you any expenses that you have. So if you have, let's just say you spent money in the business, right? just either have the receipts or have the bank statements that show where you spent this money at, okay? So that we can document that. If there's money that you received in, let's just say you had money on Stripe, right? Stripe now they send a particular document in. Lisa, what's that document that Stripe sends? That Stripe will send to us.
1099. 1099K.
1099K, okay?
Yes.
It's a 1099K, okay? So it's a difference
Right.
between 1099 and 1099K, guys. And so that's the document that they're sending. They're sending that same document to the IRS, okay?
Yes.
And so, and the IRS is like, okay, we know that you got this money from Stripe, okay? So, okay, we want to see when you file if you're gonna show that your income was the same as what you received from Stripe. You understand what I'm saying? So don't try to like cheat the system because the IRS already know. Right? You get what I'm
Yes,
saying?
and sometimes, Jared, they're not even cheating the system. It's the fact that so when Stripe charges someone $20 on their credit card, they take their 3% out. So they send you the $20 less their 3%. So for those of you that are trying to report everything just by the cash deposit in your bank accounts, it's not technically correct when you're doing credit card processing. You have to report that grossed up 1099K number, and then you have to subtract the fees out of it and not just report what's been deposited into your account. So that's why it's important to work with us so we can figure that out and keep you compliant again. And then
Correct.
actually one of the biggest fallacies I hear from people when they come to work with me for tax time is, do I have to have all my receipts to send to you? I do not need to see all the receipts for your expenditures. Now, if you have capital purchases, purchases over $5,000, I may ask to see a receipt on that because we have to record it a certain way. No, what we need you to do is to keep hold of your receipts, and you hold on to those receipts for a 3 to 7 year period, and they're only there in event of an audit and you have to prove your transactions to the IRS. I don't need to see the receipts to file your taxes, but I want you to have those receipts to support your case if your taxes were to be reviewed.
Guys, and this is what I'm saying, like, so that's what I would say on this end. Like, even like this is what I'm saying, guys, like even credit card statements, right? If you got business expenses on your credit card statements, you got those business expenses on the credit card statement. Like, what I'm just trying to say is that it's just so many things that, mileage, that you may have, there's so many different things that we don't account for, depreciation. There's, I mean, in my corporations, I have things like longevity awards, and I have things that there's safety awards that you can have, and there's cafeteria plans, and that doesn't mean something I'm going to eat, and it just means that you can kind of put together the different pieces that you want to deduct from what you're looking at. Man, I'm telling you, it's just so many different things. Yep, there are apps out there for mileage. And
Yes,
so mhm. Go
no,
ahead,
thank
Lisa.
you for bringing up mileage. I believe the mileage rate for 2024 is up to 60 some cents per mile. And that's huge, people. It's worth it to have the app on your phone. You swipe one way when you're driving for business, and it'll calculate and track that miles for you all during the year. And you can get 60 something cents per mile driven for your business written off as a deduction against any income. It's worth tracking that and taking a little extra time.
Man, what you talking about? Like, look, I drive so much. I drive when I'm going on I'm going out of town for trips, and I'm going down there to handle some business. Man, I drove from here to down to Florida. It was like 7 hours each way, right? And so I just got back doing some stuff up there for one of my other companies up in Virginia Beach. I drove my whole family up there. We handled some business up there, and like I said, so both that trip there and back, my when I my lodging expenses that I had on that trip, right? Like when I'm going places, I mean, everywhere I go, me and my family, we talk about business everywhere. When we're going there, we're having business meetings in those areas. We're doing a little bit of that business, right? When we're going out to various places. All I'm saying is that, typically as an entrepreneur, it's not really a time that, we're not conducting some business, right?
Yeah.
And so, like I said, it's about documentation, understanding what you can write off and what you can't, right?
Yes.
And making sure that it's reasonable, whatever that it is that you're doing. You see certain people where they say, hey, they can write off pieces of a jet. Well, it's like, hey, do you have to have that to operate your business, right? There may be some people that need those things to operate their business, right? There may not be. That may not be a thing that they need to operate their business. And so when you look at things that you need to operate your business, if it's justified, if it makes sense,
Yes.
right? These are things that can be written off. Maybe not 100%. Some of those things can be written off 100%. But this is what I'm saying, guys. It's probably, when I have looked at people's stuff, I'm like, oh my goodness. Like, I had a guy, he had made $3 million. And I know most of y'all probably ain't making no $3 million a year, but he made this money. And then I didn't talk to him for probably about, a minute. And then I looked at his tax, and he showed me his taxes. Oh man, I had to spend this amount of money in taxes. It was like something like $85,000. And I was like, I said, hey, but you're a C corporation. And when I started like prying in to it, and I started looking, I said, hey, you're a C corporation. And I started looking at this and looking at that. I said, you shouldn't have had to pay no taxes like that, because you had a loss here, you had a loss here. Where were you paying 85? He was like, well, I had this person do my taxes, and they said this is what I owed. I said, no, because you weren't set up. You weren't set up as a flow-through entity. You were set up in this way. And when I explained it all to him, it was like, I said, hello, Matt. He was like, he was like, yeah. He was just speechless. He was like, do you think I can get my money back from the IRS? And I was like, well, shoot, you need to look at talking to the person who filed your taxes. But this is the whole point. Like, like, I'm like, shoot, I was like, look, man, I don't even file taxes, but you could have paid that $85,000 to me, and I could have made sure you was good. So for the whole year, tax consultant and everything. So anyway, so listen, guys, all I'm just saying is just make sure that you are with the right people to make sure that this happens. Okay. And so that's why I said, anybody, when I'm talking to anybody, wherever they are in the United States, okay, I'm like, listen, they say, well, who do you have, a tax person? Yeah, I do. Lisa's my tax person. Lisa's the person that I refer to people. And I don't, and people that know me know that I don't, I'm not a person to, I don't promote anything I don't believe in. I don't promote anybody that I don't feel like cannot just do the job, but go above and beyond what it is that I believe that they can do. And so, and that's it, guys. So listen, it's 8:51. If y'all don't got any other questions, hopefully that answered your question, Angel. And somebody say what app? Adama ask for what app? What app for mileage? They have a few of them out there, but Lisa has a good one that she typically refers. Lisa, what's the name of that one that you typically refer for the mileage? It's let me see. I think it's called Lisa, can you hear me? I don't know if she can hear me on that end. If you're saying something, you're muted.
Okay, yeah, my mouse got stuck. I couldn't unmute quick enough. What was that?
Yeah. She was asking about what is the mileage app called?
The one I enjoy is Mile IQ. That's a good app. But if you're using QuickBooks has a built-in app for it as well. But I like Mile IQ.
Okay, but then they also, and then QuickBooks has a built-in app.
Yeah.
Okay, cool. Well, yeah, guys. Hey, look, that's it. Y'all stay tuned with us. Make sure, hey, look, inside of the SB Nation, you guys can go in there. I have some great content in there, some great things in there that's free for you guys on this end. If you guys have not seen that first video when you go in, it is phenomenal. It's one of my favorite videos that I made. You guys go in there, watch that. That's going to help you so much with your business. That's free, doesn't cost you anything. As soon as you go into the member portal at the top, you'll see that video right there. That'll help you. And we're gonna rock and roll, guys. So we appreciate you guys. Until the next time, thank you so much, Lisa, for coming in. Thank you so much for being able to offer this these free consultations for my people here. And we'll look forward to making this thing happen soon, guys. So y'all take care. God bless, and y'all have a wonderful night. Peace, peace, peace. Take care, guys. Bye-bye. Bye-bye. Bye-bye, team. Y'all take care. Bye.